But what's the way forward for 2013? Will 2013 be as rewarding as 2012? Or in the near term, now markets are pricing in all the good news? Which are the key sectors and businesses one should focus on? Market men are of the view that for 2013, Indian economy will recover and it's time to focus on infra and banking stocks. Let's discuss that and let's debate that. What's the way forward for 2013 with Mr. C. Jairam. He represents Kotak Mah Bank. Mr. Jairam, welcome back. Thank you for joining us. Mr. Jairam, Indian markets are up 28% this year. Benchmark indices are up more than 10% in the last 3 months. So how does a long-term investor figure out that all the good news is not baked in and there is still some more headroom left in the next 3 to 6 months?
No, obviously 2012 was a particularly good year for equity investors. Unfortunately, I think very few Indian retail investors captured very much of this upside. And I think that the bulk of the winners, at least during 2012, were foreign investors. But I think 2013, to my mind, there is certainly a possibility that we could see reasonable returns in 2013 as well. Maybe not the sort of returns you saw in 2012, but something of the order of about 15% upwards is a distinct possibility, subject obviously to a bunch of things. So I think my own sense is that you would probably see far more Indian retail participation in the equity story during 2013 as compared to 2012.
Mr. Jairam, morning. The immediate concern, of course, is on the US fiscal cliff. How critical is it for Indian markets at this juncture?
No, obviously, US fiscal cliff is something which concerns all global markets, and that certainly includes India. Having said that, I think this is just a temporary sort of standoff, and I can't see this lasting for more than a maximum of a couple of weeks or so. I think this issue will necessarily get resolved in some fashion or the other, give and take on both sides, Republicans, Democrats. But I think by middle of Jan, this is an issue which will be at least for the time being settled in some fashion. So I don't see it as a major impediment to markets. It's obviously an immediate concern, but I don't think this is going to last more than a couple of weeks.
Mr. Jairam, now 2012 has not been such a bad year for global economies as well. Growth has made a comeback. Austerity and growth, they have coexisted. Europe is no longer in a mess. US economic data of late has improved and the Chinese PMI data also has improved. But do you think 2013 could be a messy year?
No, I'm not necessarily convinced that globally 2013 is so sanguine, particularly for developed markets. I think the bright spark is probably likely to be the US, which will probably continue to sort of show signs of some growth. I think essentially in Europe, what you've achieved for the moment is a temporary truce, if you want to call it that. The can has been kicked down the road. But I think fundamental issues still exist in most of the economies, and including some of the larger European economies like Spain and France. So I think Europe will continue to be a troubled sort of area for a period of time. Japan, again, is going through a period of very low growth, all sorts of issues. The good news, of course, in Japan is that the new government seems sort of convinced that the way forward is to sort of devalue the yen, and in a sense that creates additional liquidity which will go into global markets. But if you look at developed markets, except for the US, which I think will continue to be the bright spark, the rest of the developed world doesn't present such a pretty picture.
So, Mr. Jairam, how should one be approaching the Indian equities in terms of a sectoral approach?
No, I think for Indian equities, I think most analysts have said this, and I sort of will be in the majority camp, which is that clearly you are going to see a sort of reduction in interest rates over 2013. You could argue whether that will be 50 basis points, 100 basis points, but it's somewhere in that sort of range. And as interest rates come off, you have obvious winners, which include the financial sector, which include auto, real estate, So all the interest rate sensitives are certainly likely to do better. As far as infra is concerned, the reduction in interest rates would certainly be positive. But for infra stocks and companies which depend on the infrastructure sector to do better, I think you'll also have to see a lot of concerted policy action from the government. And that is something which one is not sure whether in a pre-election year you will see too much of.
So, Mr. Jairam, how do you expect the sequence of events, panning out for Indian markets for next 2 or 3 quarters?
No, I think obviously my own sense is that once this global issue of the fiscal cliff in the US is sorted out over the next couple of weeks, we will see an immediate sort of upside. And my sense is that you will see that upside leading all the way into the budget. So till the middle of February, till almost the end of February, you will probably see markets which are fairly buoyant. I think post the budget, the markets will really reflect what their view is of what has been done in the budget, because clearly there are 2 possibilities. One is the possibility that the government does indeed sort of tighten up on the fisc, shows concerted action to show that it's moving forward both on policy decisions as well as in terms of reducing the fiscal deficit and current account deficit, which are major concerns. If that is the way that the budget is positioned, then I think markets will continue to do well after that. However, there is an equally likely possibility that given that this is a pre-election year, the budget could be more populist in nature. And if that is the way the budget is, then I think some of the old fears of downgrades, etc., would start to resurface. And to that extent, markets could be under pressure.
Mr. Jairam, do you think 2013 could be a landmark year for the Indian banking sector also? Because we have a new banking amendment, or a new banking amendment has been passed, and Reserve Bank of India is now looking at rewarding new licenses. So do you think in 2013, 2 or 3 large corporates could get a new license?
Well, I think the sequence of events would be that immediately the Reserve Bank would have to issue final guidelines for the banking licenses. They have issued draft guidelines. So I think the final guidelines will come through in about a month's time or so. And post that, normally the Reserve Bank appoints an expert committee to sort of look at applications which are made for the banking license. My own sense is that this procedure is normally a 6-month to a 1-year sort of procedure. So it'll probably be by the end of the year before licenses are sort of finally given. And again, the sense is that you're probably talking about 3 or 4 licenses. Now, will those licenses include people from the corporate sector? I think it's still unclear at this point of time.
Mr. Jairam, what about earnings? And do you think the earnings cycle has now bottomed out with the last quarter? And will EPS growth come January be enough to drive the next lap of rally for equities?
I think, yeah, it's fairly close to bottoming out in terms of most sectors. Having said that, I don't expect any dramatic change in the next quarter or 2. But I think if interest rates do come off a little bit, if broadly policy measures start to look a little more positive, I think by the 3rd and 4th quarter of calendar 2013, you will start to see earnings look better. And you're probably over the year looking at an earnings growth of somewhere in the region of 12-13%.
Mr. Jairam, do you think next year beaten down sectors could make a comeback? Infra, power, utilities, or it's too early to make a case that fortunes for them will revive anytime in next anytime in next 2 or 3 quarters?
Yeah, I think in most of those sectors there are 2 things which are in play. One, which is probably the less important thing, is the interest rate. Now, I think it's fairly certain that the interest rate is going to come off in some fashion over 2013. You can argue about the quantum, but it will come off in some fashion. So that will certainly be positive for some of these sectors. But to my mind, that's not really good enough because beyond that, the sort of fortunes of the sector are really determined by policy action. And policy action on some of these are on multiple fronts. whether they are on coal linkages for the power sector, whether they are on land acquisition in the context of certain other projects, environment issues in the context of some infra projects. So I think these are the areas where there has been lack of policy action over the last year or so. And I think if you can see some of that coming back in 2013, then you will probably start to see some of these sectors, at least interesting investors who could then sort of say that the sort of structural change is starting to happen.
Mr. Jairam, what about alternates? Just about everyone is of the view that it's time to sell gold. It's time to move money out of fixed deposits, and it's time now to invest in equities. And we've heard this argument again and again from last 3 years. But the bottom line here is that in last 3 years, gold and fixed deposits, they still have managed to outperform equities.
Yeah, I think in the Indian context, let's look at the two a little separately. I think gold, I probably subscribe to the broader view that at these levels, while there may be some marginal upside over the year, it's certainly not going to be significantly higher than some of the other asset classes. I think fixed income is a little different. Clearly, you are still seeing sort of interest rates at fairly heightened sort of levels. So theoretically, you can play fixed income in two fashions in India today. One is you can lock into these fixed deposits for longer periods of time, which will give you returns of 9.5%, which is a good return for an asset class which is much lower down the risk curve as compared to equities. And alternately, you can look at investing into bond funds, gilt funds, which are of longer tenure, if the call is that interest rates are going to come down to 2013. Because in addition to the carry yield, you will then also get the benefit of an appreciation in these bonds and gilts. And that's sort of a methodology which a lot of, I know, wealth managers are suggesting to their clients.